Okay, hi there guys. G'day Bobby. Just let me know if you can hear me loud and clear and you're ready for my ramblings, the morning ramblings. Pretty much loading coffee this morning. Too much time just waking up, checking the markets, waking up, checking the markets. So a bit of fun last night. Yeah, perfect. All right, we'll get into it. Welcome. Um, Now we're just going to go through obviously what happened overnight. There wasn't a lot that happened overnight. I'm going to try and continue to do this obviously each morning as best I can. I think it's important just at this stages that we're at the moment and the way the markets are. It's good keeping it, day by day tab, I guess, on what happened overnight. Um, but whether you like it or not, it actually is important. I think anyway, if you're trading for your longer term trading anyway, just find out, well, to check out what happened overnight, what the US did, and the reactions during the session too. Not just okay, the market, the US Dow was up last night, and the S&P was down with the Nasdaq slightly. So nothing much night. Problem is, it reacted quite hard on the back of some news at 10:30 our time, 10:30 p.m., which they had their data release, and that was coming into the US Open. It got smacked on the Open and then bounced back again. So it is I think quite important just to check out what price action took place overnight, especially in the Dow, um, so we can get an understanding of what is moving and could move the markets that come into our day session as well. And yeah, I think later on when the market's buoyant again, could be soon, it could be a long time away, when we get some more, I guess, certainty into the market and then it starts to trend again, then things are probably less important to know what happened overnight because the market's going to trend either way. Bulls are bulls, bears go into hiding, all that sort of stuff. So and I think it's good for intraday traders and just to check out what's happening if you're trading intraday, whether you're trading some shares, just to get an idea of where the market could be heading. Um, Also, what the SPY is doing. I know a lot of people probably don't look at it, but I tend to, even when I'm trading um, shares as well, because if there's a sudden move and you get caught off guard, intraday trading shares, or you could even be looking to buy longer term, it might mean that you just want to hold off to see what's happening with the market, the overall market, and generally the SPY is going to be the first thing that's moving, and it'll drag the index, the ASX2, with it. Um, what was I going to say? So, like I said, any questions? If there's something you wanted to cover next time, on Monday anyway, just send us an email to support@tradesetup.com.au. All right, let's rip into it. So gold, this is the gold chart. This is an hourly chart. The overnight action, you can see that the market, I think it's still being pressured down. You can see the market pressured down. That was around the open, wasn't it? Yeah, so that was about the data release. It did bounce on that data release. So you can see that there is still, in my eyes, I'm viewing this sort of action as there's some profit taking going on because it is a bit of an each way bet. We got Jackson Hole out tonight. If anyone doesn't know, that's where the Fed chair, was it Powell, will be speaking, and all eyes are on him at the moment because we know that Europe's easing. They're trying to support the market, rate cuts, stimulus, all that sort of stuff. But now it's the US. Now, obviously, Trump continues to try to bully, and the market's trying to bully him into rate cuts. Okay, but the problem is the data coming out is not too bad. They had manufacturing data, and that's why gold pretty much spiked and got sold back down again into the close. Manufacturing data, which I think came out worse than expected. It wasn't so crash hot, but then they had employment data, or the unemployment rate was actually steady and held out quite well, was better than expected. So, and that's what the Fed focuses on the most is jobs, labor market, obviously inflation, and they've got a mandate, and they're actually hitting it now, but the market's trying to bully him into rate cuts. So there's sort of from their point of view, there's even been some votes against the rate cut, the previous rate cut, let alone a new one or a whole rate cut cycle. There was some votes. I don't know what, but one of the Fed Reserve. I don't know what do you call it, county or state it was, but voting against it. But they saw that the previous rate cut as more of a steady rate cut, a steadying rate cut, I guess, not the start of a new cycle. And I think what they'll be looking for now, the market's well and truly, factored in some rate cuts going forward. whether, maybe a couple more and be more aggressive on rate cuts towards the end of the year. Now, if the Fed come out and say, no, we're not going to be doing that, it could, all hell could break loose in the equity market. And you're sort of seeing that by gold. It's looking like it's getting pressured, but that sort of reaction to bad news, bang, up she goes again. So there is still that tentativeness in the market, I think. All round, we got the equity markets have bounced back, but they could be right at that point where if the market doesn't like what they hear tonight, bang, over they go. So we'll take a look at that. I think the futures are still hanging around. Well, December futures too are still hanging around above 1,500 an ounce, $1,500 an ounce. So you've seen that support. It's coming down, bounce back up, high low here, push back up to 1508, back down into that support zone, bounced up strongly on the data release last night, and then it's edging its way back down again. So it looks more or less just a confused market at this stage until there is some sort of clear direction on rates, US stimulus, what they're doing, debt, massive debt issues, all these sorts of things. So there's so many different factors people are trying to juggle. Let's go over to the UK. So this is FTSE index, the CFD on the FTSE index, the hourly charts. So we're just looking at hourly charts until I change them. You see that market was grinding higher, and this is the overall action. Tipped over, bounced back, found resistance at 73.06 or thereabouts, just above 7,300. Straight back down to that support, and it's been grinding back up. But we've got this lower high starting to build at 72.19, and it's starting to hold. You see the reaction low off that, high low, push back up, chop back down again. So it is very choppy and tentative at the moment on FTSE. I don't look at it a hell of a lot, but it's good to see what action's happening there. Don't forget they've got Brexit issues they're trying to deal with, so that could be a lot of the not negativity, but adding to the negativity in the index. We'll go over to Germany now, just to keep in the Europe theme. You can see same sort of thing. Market tipped over, bounce back. You got that initial bounce back, which you always get. Selling come in and really smacked it back down. So that was when I think Trump said something, tweeted something just smack on the open of the US, which is kind of convenient, and then obviously got sold back down again. So there's still that negativity around. Washed out the lows, and it's been bouncing back since and really traded up into those highs at 11,850. So that's sort of your key resistance zone, your major long-term resistance zone. Now, this to me, the way it's bounced back, that's been great. But that sort of reaction last night, and that was into the close of the European session. So it was doing okay, and then it got smacked down. And that was on the back of the data release, manufacturing in the US. So they got smacked back down, but now it's been a tentative grind back up. Now, a tentative grind back up after you're coming off these key resistance on 11,850 I don't believe this market is going to rocket up. I mean, anything could happen, but it's just starting to look heavy here. If you've been buying it up there, you'd probably be wanting to think twice about holding a position over tonight. You can always lock away your gains, and if it happens to break through, then you can jump in. And it's all dependent on that news. But if you are long and you're holding some handy profit, if this market moves, you could be chasing your tail down, trying to get out. So from a risk perspective, I think most people would agree that you'd want to get out, come into that. The Fed Chair's talk tonight, his speech tonight, just so you've got a clean slate going into that, and then reassess it after there's some news come out, after you can find the way the market's going to react. I mean, you might expect he says something and the market's going to react a certain way, and it could not. It could clean out some highs, clean out some lows, whatever, and then turn around and rally hard the opposite way than what you thought. So it's always better to clean the slate. And it's the same with, I don't know who's traded payrolls, US payrolls on a Friday. Was it the first Friday of the month, which will be in a couple of weeks? Trading payrolls, it's good to sort of have a clean slate, because you can see what the numbers expectations are. If it comes out above or below what you expect to happen, and if you don't see that, then you've got to adjust as you're going, because the market will tell you what it's going to do. All right, so for me, these two key levels just in the DAX, 11,772. If it takes out that high, it could grind back up to 11,850 today. Otherwise, if it starts to get heavy and start pushing down, you'd expect that's going to be a lower high and really trade a bit lower, potentially testing down to 11,595. But we'll see how that goes, if you trade anyway. Now, Wall Street, this action's very choppy. It looks like, you've got your high low here pressed up into that resistance at 26,400. It's broken down, but this is all chop. I don't tend to just say, okay, with this candle, it's pushed down, it's broken this uptrend. It doesn't mean anything too much until you start getting lower highs. You want to see the pressure in lower highs if you're going to be bearish. Otherwise, this could just hold here, wash out here, People get bearish, turn around selling on the way up, wondering what's going on, then holds a high low, bang, up she goes through 26,400 and really drag some people out. So you'd need to see that bearish action in lower highs and then selling to that on your lower time frames just to watch, give yourself a bit of an edge, and then hopefully you get something like this. I mean, see that market pushed up into resistance, chopped around a bit, held this lower high. You could trade that short, maybe on a lower time frame. It played out beautifully. Again, here, it played out not as good, but it did roll over from there. So you want to see this negative action. You want to see sort of a grind, a bit of a push back up. The buyers start to running some heavy selling pressure, and then them starting to give up at a lower high, lower level, and then roll over. So that's ideally what you're always looking for. Whatever time frame, that's the idea that I'd be looking for with I'm trading off a 5-minute chart, an hourly chart, a daily chart. It's that same sort of price action, just showing you the weight of numbers, which direction you can anticipate that it's going. The S&P, same sort of action. I think it's getting, if you just draw pretty much, well, let's just do that segment from here. Whoopsie daisy. Oops, daisy. Let's go that up. Bounced off. It's getting heavy up towards that 29.40. By that reaction lower, that was quite heavy if you ask me. So that's sort of, there's that anticipation the market could drop. Not saying it is just yet. This market could just chop. I would expect it to chop around until, I don't know what time he's talking, but it's later tonight. So that's why I'd sort of expect kind of a flat session today. Let's get on to seeing where the SPY is at the moment, just where the open, to find it. Here we go. So we'll talk about, this is the action from yesterday. We'll talk about that in a second. Now that, to me, again, looking a bit heavy with the 5-minute, that was up into the close. So I'd see a bit of resistance up here. Just take a deeper look. So that's the market tipping over. You can find that bounce off the 64.23, bounced up, chopped around here quite a bit. Good selling. I don't know when that was. That was a few days ago, wasn't it? That's a 5-minute chart. Sorry, I'm on a 5-minute chart here, not a 30-minute chart. So that was overnight. It got banged. That was pretty much on the announcement. So at 10:30 when the US Open got sold off, so that we just followed it basically. Finding some resistance, some selling pressure every time it tips up there, backs off, and it come all the way back down to this support zone around 64.50, sorry. Bounced straight back up, found selling again, straight through 64.50. So now it's bounced back up and it's finding pressure at a lower level. So the SPY to me is looking set to roll over. Whether we do or not is a different question. Because we're coming into the weekend, we won't see until Monday the results of the Jackson Hole and what the market did. So during the day, I think there might be, I would expect muted action on the ASX today, purely because, I mean, personally, I wouldn't take positions coming into that because you could go long and then boom, you get caught out. We've only got one long and one short, both going in our favour at the moment, but that could change quite quickly come Monday if the market takes a nosedive tonight. So I would expect today to be a bit muted. We were expecting from the price action overnight, the market opened down about 14 points, 10 to 15, between 10 and 15 points. And it looks like we're putting a squeeze on the longs that are built up here, and the ASX is potentially, well, the SPY is potentially going to squeeze lower. So it could be a weaker open than down 14 to 15, but it's just starting now. So we'll see how it kicks off. Let's just see what happens on the open for the next few minutes. I'll go back over the SPY. The trades from yesterday that I saw playing out. So, sorry, for today, potentially this could be a lower high. So if we get chopping around here and we spike lower and we kick back up, and we get caught out, a bit like yesterday. This is what I want. So if we sort of do this type of action and keep getting these lower highs come into play, that could be a shorting opportunity. But like I said, I mean, we could bounce straight back up. I'd be very tight on my risk if I'm going to attack this market today. But it just depends. We're going to see how this market opens and see if we are going to be a bit of a tentative market. Could easily get a sell-off into the close today as people just square up. Might have squared up some short-term positions. There might be some, the buyers are non-existent and sellers, anyone that's long that just wants to square up and push the market lower into the close. We don't know, so we have to see how the action goes. But I'd be looking for, as long as this level holds up, we can't get up to that 64.60. any sort of lower highs, I'm looking at the 5 minutes, lower highs, pressure in the market lower, there could be that move down to 64.30 easily. It's only 20 points or so, or this support at 64.23. It could easily get that sort of push back down here again. So trades from yesterday, I didn't trade anything yesterday. I was caught up doing other things, but really just looking at it. It was a tough one on the open because the market's still heading high. It gapped up. The only problem is it's getting oversold. Sorry, getting overbought way up here. And the way it opened up quite strong and then bang straight back down again. You'd be questioning what's going on the bull side and whether or not this is serious strength. And what played out, I wouldn't have probably traded this at all. It would have been a bit too tough because the way I would be looking at it is really getting a narrow range candle. Like you got something in here or in here, narrow range candle, and then looking for expansion. If you're bearish, something like this, narrow range, sell the break at the bottom, stop at the top, same here, and then just see where it goes to. The beauty, so that was a bit tough here, nice wide stop. But what I would have been looking for, this congestion here, you've got congestion, but it's failing. What it's doing, holding up at a sort of a high low around 64.60. Okay, to me that should be bearish. Sorry, should be bullish, especially after this open. And what you would expect is the market to pop up. Okay, that played out. But then you had 5, 10, 15, 20 minutes of really nothing, and it was struggling. So if that was bullish, you would expect it to go without questions. High, low here, off she goes. Test up towards the highs, 64.84, and then potentially got a trade on your hands, a bullish trade on your hands. So if you can hear my daughter coughing in the background, she's off to kinder today, so I'll get rid of her soon. But instead of that bullish action, you got this market, and you can see even on the 5 minute counter, you got spike up here, rejected, right down. Tried to come up, lower high, rejected. Pretty much the next 5 minute candle, rejected. Tried to go up again, making lower highs in here, and rejected. And then we broke out to the downside here. So this little move and this pop back up, you still got a bit of buying pressure. So maybe a bit aggressive, but what you're looking at is these lower highs coming into play. So this really you confirmed as a washout. Some lower highs coming into play. So you're expecting a bit more pressure than just that. And that was getting soaked up. So sellers were really soaking up any sort of buying pressure pushing up. Soaked up again, and you've got your trade. So you could have easily just sold it. I mean, this is hindsight. Harry Hindsight, the best trader in the world. Selling on the break, so it's around 67. Stop up. Your 5 or 6 point stop on the SPY is pretty good, especially in these volatile environment. And then you got that expansion, and you could have gunned down to that pretty much. The way I look at it, just getting chipped out around 59 or so. So it's only 7 points, some nice little scalping, but quite handy. You got another go at it here, except that was a lot choppier. It probably would have turned out roughly nothing. I would have said, an entry around 66, potentially I would have been stopped out here, 62, so really nothing. But after that, I think it would have been tough going. You got this price, because by the time you get to here, and you can see that in here, price is starting to hold at a higher level, you got to reassess the situation. You reassess the situation where, okay, that's not the weakness I was expecting. I was expecting that to go through, maybe pop back, bang, straight through that support. It didn't happen. You got this strong reaction off the support. Okay, potentially we're going to have another go at it. It needs another go. It needs to back up, have another go, sellers to come in, and then so you got this green candle and a couple of red candles, a green candle. You got to question that. That's buyers starting to chip in at a higher level. So they're potentially looking to support this zone at, what is it, 64.50. And then of course you got this green pop up. So after that, I wouldn't have touched it. It was just way too choppy. And I think this is the rally that was after the close. So we closed, ASX closed at 16:10, say. So 4 o'clock, 10 past 4. At that stage, it was coming back down to support. Bit of a bounce into the close of the futures, and then open to the futures, boom, straight back up again. So really choppy action. So yeah, there was a couple of opportunities there, but it was choppy. You didn't get that, say, this kind of thing where you got this trend. You could have just taken this. You could have taken potentially overnight, if you can, sell through here after these, few retests and fails up the top here, up near resistance, highs from the day, started to fail, US getting sold off, market was opening. It would have been a tough one. Probably would have been quite a bit volatile, but really there was a trade there, and you can see that was what you want, that expansion lower. Nothing broke, lower highs here, and then it just started to tip over. That would have been a cracker if you could have traded that overnight, but again, spreads get a bit wider on the SPY overnight. All right, so that's it. We're still chopping around here. What are we now? 6 past. We've just gone for 21 minutes. We'll just see where the ASX is. It's up 3.9, so that's quite handy. We'll see how that goes. Wrap on the move. What's happening with our RAP news announcement? Bummer. Been watching that for a while and gapped up. That's awesome. This is what I don't like about reporting season. Makes it tough. Anyway, so thought it would open down. Instead, the market's actually opening up. So I think it's getting supported in here, which is, it's handy. It did open down, or 10 points. It just rallied the last 5 minutes. So coming to the close, we'll just see 10 past. It probably, I would expect it to sort of sit around here where it closed yesterday. All right, guys. We'll call it a day there, I think. Well, we'll call it a morning. I've got to get going. Good luck today. Just be careful, I guess, today. If you're intraday trading, if you're going to look at some longs on the market, we'll just see what the market does coming into the close today. I think it's going to be an interesting one. Yeah, have a great weekend, and I'll speak to you again on Monday. So we'll hopefully do this Monday morning, and then we'll have the live stream at 12:30 on Monday. I might be a bit tired. We're going away on the weekend, so get back late Sunday night. So I could be loaded with coffee again, but we'll see. All right, guys, have a great weekend, and we'll speak to you soon. Bye.